Good morning, ladies and gentlemen. This is Market Forecast brought to you by Options University. This is Butch Shorak. It's Monday, March 3rd, 2014. Access to this video is for educational information, all purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profits. And as always, do not trade with money you cannot afford to lose. Well, as we look at the previous week, we find some really nice numbers coming out of the Dow, the NASDAQ, the S&P 500, the Russell 2000. As we look at the change for the week, everything is in positive numbers. The only laggard for the year still is the Dow, still down 1.5%, as it had a percent change for the week of 1.4% to the upside. NASDAQ up 1%, giving it a 3% gain for the year. S&P 500, as we break into all new time highs, up 1.3% for the year in positive numbers at 0.6% year to date. And the Russell 2000 up 1.6%, also in positive numbers at 1.7% for the year. So we finally had that breakout that we were talking about. Looking at the week to come, what kind of economic announcements do we have? Well, let's take a look and see exactly what's coming for the coming week. As we look at Monday, March 3rd, we got motor vehicle sales, personal income and outlays, all before the market opens. ISMG manufacturing and construction spending at 10 o'clock respectively. Looking at Tuesday, March 4th, we see very little happening on Tuesday. What was really going to dominate the coming week, though, is international news, as we see things heating up and a war on the horizon in Kiev and in the Ukraine, with Russia being a major part in what could be big international news this week. By Wednesday, if we don't see some kind of huge war in Russia, we will see ADP employment at 815, and we will see ISM non-manufacturing index. These are the same the studies that come out every single month as we break into the new month of March, with September long gone as we move forward into March. Jobless claims are on Thursday at 8:30, just like they are every week. Productivity and costs at 8:30. And then finally, factory orders coming out at 10 o'clock, giving us an idea how our corporations are doing at producing what really makes our country tick. That and consumer buying is what really makes us go. Looking at Friday, March 7th, the employment situation for last month comes out at 8:30. We'll see what these numbers will give us. And finally, international trade at 8:30, which may or may not move the market at any rate. Big news for the week as we look at the market on early Monday morning. When the market futures market opened on Sunday evening, we saw the S&P futures down approximately 2%, as war could be looming on the horizon. Let's take a look at the SPX for the previous week and take a look at that breakout that we finally had and did expect. So there is our previous highs. There's a single top, double top, and finally triple top, and then we had a breakout. Now the key thing is, what kind of volume did we have on that breakout? And the next thing that we'll be looking at is what happened. What effect we'll check this week to see what effect the war will have on that move. Looking at a little closer time frame, a 1 month chart, we see that we got our breakout on Friday as we saw the S&P finally break above those previous highs into blue sky. Well, where is the Dow in all this? Well, the Dow has been lagging. We talked about it earlier in one of our first slides. And so looking at the Dow, we see we have not yet reached all-time highs, which are right up there over 16.5, and we see right here that we're at about 16.3. So a few points away from the all-time highs on the Dow, as those 30 stocks certainly have showed us a bit of a lag. But remember, the S&P 500, you got 500 of the most powerful companies in the entire world leading you and telling you what really is happening in the market. What did the NASDAQ do during this last week? Well, we see the NASDAQ also breaking into new time highs, and we'll see whether that continues on as the NASDAQ gives us positive numbers for both the week and the year. A breakout, can you say? All right, looking at the Russell 2000, also in the same situation. Breakout as we see blue sky ahead for the Russell. And what kind of environment do you think this causes? How much emotion is the market? What is our fear index going to show us? Looking at a one-year chart and looking at the VIX, we see that we're near the lows. We're not at 12, but here we are sitting at around 14. Previous highs occur in June and October and in February. Remember, this is the best 6 months of the year. And barring international news fooling with the overall cycles of the market, we should see higher highs coming as we have a market breakout. Now remember, we were down about 1% on the S&P futures as the market opens Monday morning. We'll see whether we bounce back from that and exactly what effect will take place between the political tomfoolery that goes on amongst the international countries. Looking at the bond market, we see the bond market basically sitting up against resistance. We'll see whether it starts heading back down again. Looking at the last year, you see we're not anywhere near the high. Looking at TLT, our 20-year Treasury bond ETF. So the bond market still in that longer-term descending market. We did have a crossover between the 30 and the 50 in the month of end of January. So we'll see whether the bond market is going to continue up. War certainly could have an effect on that. Looking at gold, we saw a bit of a breakout, hit resistance, and started to roll over. But remember, this haven of safety could have an effect on what happens with the Ukraine and Russia. Now let's take a look at what we talked about earlier. Let's look and see what kind of volume we had with the breakout on the SPY. And as we look at that, we see there's our breakout on Friday. And what did we have? A little stronger than average volume. That's a little higher move up as we got our original breakout, and this very well could continue. But again, news overpowers everything. Looking at the financials, XLF, our ETF for our financials, which have been lagging, basically following the lead of the Dow, we see that they have not broken into blue sky, certainly in an uptrend, and certainly having potential for blue sky. But remember, this has kind of been lagging with the Dow and continues to do so. So XLF not near all-time highs, but looking at a one-year chart, we see that certainly has been in a very nice uptrend. And what will oil do if we have a cessation of oil flowing out of Russia and all the political games that will be played? Well, that remains to be seen, as we saw a bit of a breakout out of oil during the month of February right there. And one might expect a little higher numbers out of oil if we truly have some kind of conflict take place. So with that, that is the week that was and the week to come. And for those of you that are gold members, stick around for our stocks to watch. And we'll take a look and see what some of these companies did as we had a breakout. Which ones are the leaders and which ones are the followers. So with that thought, if you'd like to see more free videos from Options University, go to www.optionsuniversity.com/free gold. And with that thought, this is Market Forecast brought to you by Options University. It's Butch Shorak, and it's Monday, March 3rd, 2014. Welcome to the month of March. February's gone. Spring is looming, but we certainly haven't seen anything that resembles spring across the United States this week. And with that thought, trade what you see, not what you think. And remember, in this particular week, news overpowers everything.